Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan and Adrian, here with Adrian Nicholson. We're back with another great episode for you today. Adrian, how's your last couple weeks been?
They've been great, Roshan. Thanks for asking. We're doing Bring Your Own Topic, something we haven't done in a while.
Now, I've got a topic that is definitely different, which is why we do this like we do. We don't share the topic with each other, so we get natural reactions, and we don't. I guess the risk we take is, what if it's the same thing? Fortunately, it's not. So, Adrian, I'd love your thoughts on this. I saw an article by Research Affiliates. It's by Q Nguyen. It's called "Learn from Last Tech Bubble to Embrace Gen AI Mania." So, a question I've heard or seen a lot is this a bubble? Is AI real? Will this continue? I think this is a good article to look into to get you some thoughts and insight on that. And I just want to give you some of the highlights from the article and some of my thoughts on it that I've had time to look at, and Adrian, some of your thoughts on it that I'm, sort of putting you on the spot to see what your initial
Oh, I'm
thoughts and
excited. This is
reaction
an
are.
awesome topic, Roshan. You picked a good one.
Oh, awesome. Thank you. Thank you very much. So, the article starts off saying that Research and Affiliates thinks generative AI has transformative potential, and that if they're right, it's in the early stages, they're saying, of becoming a bubble. And here's where my interpretation comes into this a little bit, is that uh, so they think it's going to be a bubble at some point, but it's not right now, right? That's what they're essentially saying. I've seen a lot of data and information on this, and I I tend to fall in a similar camp and I should say, this is not investment advice. Please consult your advisor. If you need help on any of these areas, please reach out to us. We'd be happy to help. So it's not advice at all. But the question of if it's a bubble, they're saying it's not, and they think it could be in the future, or they're essentially predicting it will be in the future. I tend to agree with that, where I'd say I don't think it's a bubble. Where whether it becomes one in the future, I'm not sure. We'll see. But do you have any thoughts on that, Adrian? If my question to you is AI a bubble that's going to burst soon or not? What's your response?
Well, the first, I will take it back to how this article really compares it to the dot-com boom, because I guess it's a very easy comparison because you're talking about technology. And, during the dot-com boom, a lot of these dot-com companies that are focused on the internet and web applications were running up, and that's a technology sector, where today you're seeing a lot of these AI semiconductor companies starting to run up and do basically the same thing. Strong performance in the year, and it's technology. So I feel like that is a very easy comparison to make. And it's something that we talked about too before, where a big thing, are these companies at the end of the day making money? And in the dot-com boom, I'm not sure how accurate this is, but there were companies out there that were just saying, hey, we don't do anything internet or web related, but we have .com at the end of our name, so we're going to experience some of the rally, even though they don't really even have earnings to begin with. You're seeing some of that kind of stuff happen, and then ultimately, when investors really start pulling back the numbers and running the data, hey, this is a bad investment, and that's where you saw a lot of these companies just stock prices fall during the .com boom. Where I see it as a little bit different, and I hope you'd agree with me, where some of these AI companies do have strong earnings. They have the numbers to back them up, where they're not just saying, hey, we're just doing AI just to say it, or they're actually having applications providing products and services that are actually being used, which is the big distinction in my opinion, compared from the .com boom to this AI run up that we've seen.
Yeah, I would agree with that, specifically on the earnings piece that you said. A lot of
Yeah.
the companies that are in there have real earnings right now, and I think that definitely makes a difference. Now, with what they're predicting, not to put words in the mouth of Research Affiliates, but with what it looks like they're predicting is that there will be a bubble. So I think, Adrian, what you said, these companies that are possibly not even in the AI space
Hmm.
and
Hmm.
don't have earnings, or companies that don't have earnings at all are gonna shoot up in value. So I think that's out there, and I think you can probably find some names uh, where they have gone up and they don't have earnings yet.
Hmm. Hmm.
So, and because of AI, so I think those exist. But by and large, the name that comes up most often when you're talking about this, at least right now, tell me if you got a different one, but is Nvidia. And when you look at Nvidia, some great points in this article. It's up 500% over the last 15 months, ended March 21st. It's trading at 75 times trailing earnings, but they've experienced 400% growth in earnings per share, and they expect it to be another 100% growth next year. So that's the company that comes to mind with your statement of them actually having earnings, and comparing it to the tech bubble. But I think we could definitely find some that don't have earnings out there. Any thoughts on the Nvidia? Am I picking the wrong name that you're thinking of as you're sharing that information?
Well, the thing I was going to add, the company that is on my mind right now, just comparing the dot com boom versus the AI run up. And this ultimately gets played in the theme are there going to be winners and losers. And during the dot com boom, I think one of the companies too was, I have to look more into this again. Since we're doing bring your own topic, listeners, viewers, please give me a break because I did no research on it because I didn't know it was Roshan's topic. But the company I'm thinking about was Google, where it really didn't experience the craze that some companies did in the dot com boom, but it was still in there, just trying to take over market share, still trying to come up. Where nowadays it's still around, where some of these companies in the dot com boom that ran up a lot aren't even around to today. So that's the ultimately what's coming to mind here is, yes, I don't think it's a bubble, but again, there are going to be winners and there are going to be losers. Maybe we know some of the winners today in the AI boom, but maybe there's some that, aren't getting the recognition or are still around, maybe don't have earnings, but might be the big winners over the long term. That's also something that I want just to point out to our viewers, because whenever you see a run up, especially in a sector or a theme, there are going to be people that benefit from it and are going to be here for the long term. And then there are some that are just going to get not make it.
Yeah, and I love the name you selected because they reference them as well. Alphabet, which is Google's parent company, but they, they didn't go public until '04. They weren't founded, I believe, until '98.
Mm-hmm. Okay.
They then talk about Meta wasn't founded until '04 and didn't go public till 2012. And Apple existed at the time, but was the dark horse. The reason they talk about this, and they use this as an argument that they're in the early stages, is they said that, and I'm going to read this to you just so I get it perfectly right. But using the internet bubble of the '90s as a guide, we draw lessons for today's investors. First, the most successful companies to emerge from a tech transformation are often not the stars at the beginning. Although a bubble will end in a bust, the mania will generate capital investment that'll yield long term benefits. And then a fundamental approach with disciplined rebalancing to capture AI mania's gains and mitigate its risk and bust is what they're advising. So the reference that they have in here to Alphabet and Meta, and even Apple, is that they weren't the early darlings of this, right? So when you look at what's going on right now in the AI space, and yeah, I mentioned Nvidia because it's such a popular name that everyone seems to talk about now, and for good reason with what the stock's done. But we don't even know the names of the winners, or the winners may not even be public yet, right? So they may not even exist yet. So just that was Meta's story, right? Just I think of the .com bubble, and to me, that's 2000, right? 2000 is the peak. Well, Meta was not founded until '04.
Mm.
So there's which also, by the way, is one of the other arguments to it being in the early stages, is just that. And let me actually get back to the way they break it down, but they're saying that the and let me actually find it so I get it for you exactly how they've got it on here. It says uh, in the early days, it's the backbone of this technology that starts it. So in the early days of this of the tech bubble, it was uh, telecom, cable companies, hardware used in connectivity and routers, and we needed people to get online first during the tech bubble days. So companies on the list, Verizon, AT&T, that still exist, are WorldCom and Global Crossing, that are gone. And then hardware suppliers were Cisco, Juniper, and Sun Microsystems, right? And when you look at today, what the most talked about names are, it's the chip companies, Nvidia and Micron, um, hardware companies, super microcomputers, and cloud services companies like Amazon and Microsoft are the names. And I would throw Google in there; they didn't include it. But so right now, when you look at Nvidia and Micron being the stocks that are taking off with this, those are those backbone companies. Comparing them to the telecom or the routers and switches, etc., and then it's going to continue to evolve. So once again, what we're looking at is this, are we currently in an AI bubble? And this is just a continued argument to, we're not there yet, we're in the early stages.
Yeah, and what you mentioned, it makes me think about just the narrow rally. I mean, that's something that we talked about in a couple episodes ago, where a few companies are driving the movement that you're seeing, the upward movement in the major indexes. And when you talk about just new technology in general, I think as an investor, you think about who the adopters are going to be, who's going to leverage it. And that goes outside of just the technology sector. Because let's just pull it back again to the .com boom, where a lot of the craze was around internet companies, web applications, this new theme that's come out into the market. And as we know today, pretty much almost all sectors are using this technology today, and some leverage it, some help them become more efficient and grow their businesses. So you could see the same thing happen too with AI. People are just thinking about technology right now because at the end of the day, that's what it is. But who are going to be outside technology? What different sectors, industries, or just specific companies are going to leverage it to help optimize their business, grow their earnings, and overall just help them improve? And that's something too where you talked about the evolution, is where investors can find the opportunity as well, because again, it's going to impact a lot of sectors, and whoever capitalize on this can really see some solid returns as far as their earnings, where today really it is still driven a tech heavy market where these AI companies are experiencing the gains, and you're still seeing some companies out there that haven't recovered really and haven't come close to their new time highs. And maybe AI is going to be this opportunity that helps some of the companies that really leverage it get back to where they were previously.
Yeah, and what you talk about right there is just adoption is already happening with this, right?
Yeah.
With businesses. So, and I think that we talked about, back then, not only was all the connectivity needed, people needed to buy computers. So I actually think we're going to have uh, more rapid adoption of these than that happened in the during the tech bubble. So, and what they're referencing on here in the article is just how another thing that had to come together was the simplicity of using Windows versus a DOS prompt before then. So making things easy to use, and you've already got that. So I think you've got AI that's going to advance, and the advance will be easier because everyone's already got computers and connectivity, and it's already there. But they're saying the early things that people are using, like ChatGPT, Microsoft Copilot, and Google's Gemini, Bard, uh, they're they're still not adopted by everyone yet. So they're saying we're, in the early adoption phase still of that, which once again also to me lines up with the story that we aren't quite at the bubble, the stage of a bubble bursting.
Yeah, and it can be tough for some investors out there, Roshan, when we're having this conversation because there are some people that, when they hear the word bubble, they're like, okay, I just gotta stay away from that sector. When I hear bubble, I get scared and I have to look for opportunity elsewhere. Maybe I'm not finding it. How would you really just have that conversation with investors out there? Just really when it comes to just new themes like this, new technology, or just the markets in general when it comes to things like this.
I mean, what's interesting to me with this is I don't think I think everyone's heard of it. Right. So I don't think it's going to be a conversation where they're like, what is AI, or what is this new thing you're telling me about? I've never heard of it. I think that if I talk to someone about AI and investing a part of their portfolio in it, I think I'll get people saying, "Great." I think it's a good idea. I don't think I'll get much pushback. Now, what the uses are of it, I can definitely see people wanting to understand that more, because that's the adoption part, I believe, is at the early stage as
Mm-hmm.
well. Similar to what Research Affiliates was saying. So I do think there'll be a conversation that, or things we can watch to look at the adoption, and as that continues. But it's just really more people using it, and it's not only more people using what exists. I have no idea what it is, but I think there's something out there now that it's just going to click with everyone. Like, just as an example, when the internet was launching, and we're talking about computer adoption and so on, no one was thinking about iPhones or Android, where you'd have a phone in your pocket and you're connected just as if you had your computer, right?
Mm-hmm.
Or simple as email, right? People, when you really look at the internet starting out and starting browsers, I mean, everyone didn't have email, and everyone had to get email, and now it's something that I'd say a lot of people won't be able to live without. So I think there's something out there like that where, maybe we're not even thinking about it, that the AI technology will make easier, right? I'm just reading the Elon Musk's book uh, recently, and they're talking about self-driving cars, right? And they've got it now. It's not fully rolled out to the world now, but that's something that you know, I don't think Henry Ford would have been thinking about self-driving cars in the
Mm-hmm.
future. So uh, because of how quickly technology changes, adopts things, and just advances, I think whatever it is that's going to be our daily use of AI, we probably don't even know what it is yet, right?
Mm-hmm.
Which is another argument to the whole early stage thing. There's 3 points I wanna pull out from this, and share. These are the lessons learned, and Adrian, I'll review them. Please tell me your thoughts after I go through them, and if you've got other
Yes, of
lessons you
course.
feel like you can share, please do so. But the first one is, capital discipline is paramount. Fundamentals ultimately matter. And this is where I think there's a little bit of a difference right now, but it's saying that people who invested in profitable, well capitalized tech companies in '96 fared well over the long term. Those who piled into speculative companies at the height of the mania uh, often experience significant losses. So, Adrian, that's kind of like what you said. Companies that just put a .com in their name but weren't really doing much.
Mm-hmm.
That's one. The second point is, picking winners and losers are hard. It's better to own a diversified portfolio. The evolution of AI will be unpredictable, and it's likely that some of the greatest AI companies have yet to emerge. You and I have already discussed that point, but this is just going back. Actually, it was one of your subcategories under investments, right? Diversification. This is saying in the AI space, and their final point is, technological progress benefits all of us. Stay invested and diversified. It says, despite the massive misallocation of capital, some of the capital that was built used to build networks, software, databases, created the framework to launching great businesses and increase productivity. That's what happened in the tech bubble, and there'll be something similar there. So be careful with your investing. And I think a little bit of their point here is that even though some people lost money, it still was for the overall good with the tech bubble. Though I don't disagree with that, I would like to avoid losing money,
Hmm.
right? Which goes
Yeah.
back to point A and point B of being capital, being disciplined with your capital, and not only with your capital, but the companies you invest in, making sure they're disciplined with how they use capital, and then being diversified in the space.
Hmm. So I just want to just take the opposite end because I'm thinking about this. Your buddy Warren Buffett, he was having a conversation with somebody or telling a story where it was around, I think it's probably around the .com era, or Warren Buffett was telling a story around that time saying a guy came up to him and was like, look how great this computer is or this web application is. Look how great it is, a great investment opportunity. It's so awesome. And then Warren Buffett sort of said like, well, I'm invested in bubble gum because that concept is a lot more easier for me to understand. I know I'm
Mm.
probably butchering the story right now, but it's the concept of, yeah, that's so great, but I invest in businesses I understand that are profitable, that are strong, both will do well over the long run. And that's where I'm saying I want to take the opposite end, where maybe somebody's listening to this podcast say, I listen to this AI talk all the time, this investment. I'm just not interested. I can go somewhere else and make some money in another investment. Would you tell that investor, hey, it's inevitable, you're gonna be in it one way or another, or yeah, you can find other opportunities somewhere else. It just might be more difficult.
I would completely say you can find other opportunities elsewhere, and I wouldn't necessarily say it'll be difficult. Not I think all investing is challenging, right?
Okay.
And there are many ways to do it, many ways to do it profitably, and you've got to figure out what's right for you. In Buffett's case, he very famously says he doesn't like to invest in technology because he doesn't know where it's going, and you can. Um, yeah, his biggest holding right now is Apple, and there are many people that will say that he didn't invest in Apple, the company with emerging technology. He invested in the iPhone maker that uh, is a cash cow, right? And I think that's a very fair assessment to say he's continued to quote unquote not invest in technology. I think that's a very fair assessment. So I would first say you can definitely make money in other ways, and if there's always investors will always talk about very very frequently about how they'll have a um, pile on their desk of investments that are too hard to figure out, and so they move on. I would not argue with anyone that said this is too hard to figure out and move on, which is why I think in this research affiliates they're talking about being diversified on here, right?
Yeah.
When you mentioned Buffett, I thought you were going to go a different route. I thought you were going to say how he talks about being concentrated on an investment, which is another Buffett thing, or another way where this AI could be opposite of some of his beliefs and teachings. And to that, my response would be um, diversification in this or in general, not just in this case, but is to minimize risk. And I think what the research affiliates uh, uh, what the author is saying there, Q Nguyen, is that being diversified will protect you in this space. And it very much is an emerging technology. So it reminds me of, and I'm sure I'll get the stats wrong, but the concept will be right. But it reminds me of like venture capital type investing where, 7 out of 10 times you're going to lose all your money, but the 3 out of 10 times you're going to make so much, it's going to get you an average of like 15+% return. And I think this would be a similar space. I'd have to look this up myself, and I think I can do it pretty quickly. But I've heard people say recently that Cisco has not gotten back up to where it was during the tech bubble. I'm looking it up right now, and it looks like its highest stock price ever was around $77, and it's at 45.60 right now. So I'd have to do some more digging, and that would take too much time to do now, but to look at valuation and so on. But yeah, that's what this diversification is trying to prepare you against, right? It's something in your portfolio will reach a high, and you could be buying it at the high that it will never reach again. But you're diversified so that hopefully the other components, similar to what I said with this is like venture capital, the other components will make it a profitable investment. The other thing, going back to your original question, Adrian, of how would I respond to someone who said they didn't want to look at it all and move on, I would definitely say go ahead, sort of move on, and would have no um, qualms about saying that. Although when I look at it myself, I do look at it and see, okay, this is an opportunity that at the very least deserves time. So that might be my pushback, right? If someone said, I don't want to do this, I don't invest like this, I want to move on, my only response to them is, do you think it's worth your time to at least look into it, right? And if their answer is no, nothing wrong with that. Don't look at it. But I think that would be the maximum level of pushback I'd give. I wouldn't say something like, oh, you've got to look at it, it's a once in a generation. Nope, not at all, because I understand circle of competence, and only investing in things that you feel comfortable investing in.
Yeah, of course, and of course, I'm just thinking of just the contrarian approach to things because this market environment, it makes me think of also the Nifty 50, where back then you just put your money in these 50 companies, they do well over time, where investors over time said, hey, you can find deals somewhere else, just go outside these names. Not saying it's an exact same situation, but again, when we talk about bubbles or certain sectors just running up, it does make you think as an investor, hey, can I find deals somewhere else? Can I find opportunities somewhere else? Could it be dangerous in a sense to follow the herd or the momentum trade or what everybody else is doing? Or is this a good time for me to rebalance and find somewhere else to go? Just all these different things you really need to consider when this type of market environment happens that I think are just worth the discussion to have.
No, I completely agree, and I think that it's a great point that I wish I had thought of and said this at the beginning. Which is, um, this is not at all saying, and I mentioned in our disclosure, we're not giving investment advice here. We're not saying you should invest in this or not. The way I'm approaching this is it worth my time to spend on it, or is it too late, right? And I don't think it's too late. And I was looking into this article just to see their additional thoughts on, could it be too late? And so if we're in a bubble, it's too late, right? But that's where I think, okay, it doesn't appear to be too late. And they think there will be a bubble, or that we're in the early stages of it, which very well can be true. And my conclusion might be similar to that hypothetical you gave me, where I'll just say, nope, this isn't right for me, and move on. But I talk about this all the time on our episodes, that you've got to triage because of time's limited, and where should you spend your time. So to me, this is just the way I end and interpret this article, is that I'm on the same page with them, in the sense that I think that there is still time in this space, so it's worth looking into. I don't think it's there as a bubble that's going to be burst. Now, once again, we'll see what the future tells us. Whether on this date, June of 2024, I was right or wrong with we are currently in a bubble that's about to burst or not, or if there's some time to run. And when I say time to run, I'm thinking years, not days, right? Or if it was days, it wouldn't be worth the effort to look into these opportunities.
Mm-hmm. Yeah, I'm definitely curious where your research heads in this direction, and definitely something we could revisit in the future as well. It's just something as investors we have to talk about, look into, and always just be on top of as these things come up.
Yep, I completely agree with you. We will definitely revisit this topic in the future, I'm sure. And for everyone listening, thanks for joining us. It's been a great episode of the Retirement Lifestyle Show. We'll be back in a couple weeks. Please like, subscribe, give us 5 stars, take control, and achieve your goals.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.